All right. Hello, guys. Welcome back to This Is Not Financial Advice. Today, we're going to be taking a look at 3M stock on Qualtrim. And just a disclaimer, Qualtrim is a software service I pay for, yet I have no affiliation with Qualtrim. So, this is kind of the overview here on Qualtrim. We're going to real quick go over and take a look at the price action of 3M. So 3M, it's a company, American multinational conglomerate, um, producing products in industrial worker safety, healthcare, and consumer goods. Okay. So most everyone knows what 3M is. And so we can see the price of this stock, and we can see that it's off of its highs by at least probably about 60%. Okay, so the question is if this is a good entry point. Let's get back over here and take a look at some of the data for our 5-minute DCF on this stock. So first and foremost, we can see that 3M is a large cap stock, large cap value stock. We can see the PE ratio, forward PE ratio is trading at essentially a commodity multiple, so very affordable stock, around a 12 PE forward. Additionally, there's a really high free cash flow yield of over 7%, which is great. They do have a good amount of debt, more debt than cash on hand. Definitely have the feeling that this is a company not going anywhere. Very high starting dividend yield, 5.6%, with some sort of issues going on with the payout ratio. So I'd assume they have a fairly decent credit rating, so I wouldn't be overly concerned about it. But let's start by looking at revenue and the trend on the revenue. Okay. So we can just see here on a annual basis, revenue is up and to the right, pretty steady. And I'm going to be using some of these assumptions based off this 2 and 5 year revenue growth rate. The revenue growth rate is incremental, steady, but quite small. So I'll be using conservative assumptions in our revenue growth rate projections. Let's take a look at free cash flow. We're going to look at stock-based compensation adjusted free cash flow. And we can see that there is some cyclicality, but we have a free cash flow generative business with free cash flow moving up and to the right. An average over the last 5 years is going to be somewhere around $5 billion a year in free cash flow. And then let's see what else we need to know. So we always like companies where they are buying back shares. Fantastic track record of buying back shares. So if you bought stock in 1985, you own a substantially larger piece of the pie by doing nothing. So company buying back shares, we love. Let's look at their ability to reinvest either debt or equity profitably into their company. So looking at the last 5 years, their returns on capital employed are somewhat steady, somewhat trending down. Over the last 5 years, it looks like their median return on capital employed is about 14.3%, which is decent. Okay, especially for such a mature company. So we have all of this information that we need. Let's take a look at any potential insider buying or selling. So we've had an executive a few months ago sold stock around $99, but it's now up to 106. So maybe he needed to buy a yacht and go back, take another peek. Not much more action in that area. So we have all of these data points. One of the risks of the stock is potentially lawsuits, but hey, what publicly traded company doesn't face lawsuits? Okay. So this is everything as far as the value of the stock. We're going to take another look at the price of the stock. Okay. let's just see if I can do a thing with a button. Okay, there we go. So this is the stock. Price goes up and down. Value usually is in a straight line. So, looks like we're pretty close here. So let's run these numbers. We've seen our prices. We've seen our value. Let's get back over here and run our DCF based on all of these data assumptions that I've walked us through. So average of free cash flow over the last 5 years came out to just over $5 billion. Total cash on hand is around $4.3 billion. Debt to $12.7 billion. These are the shares outstanding. Data I pulled from Qualtrim. Growth rates, fairly conservative projections. Next 5 years, 2.25%. 5 to 10 years, 2%. Terminal growth rate, 1.5% with a 10% discount rate, or required rate of return. Current stock price on 3M, $106. And as far as the value of the stock, I've come up with $96. So approximately fairly valued for a wide moat, pretty mature, stable company. I own it. I like it. I'll continue to hold it and buy it at this price. So thank you so much for tuning in. Again, like, comment, share, subscribe, bell notifications on. This is not financial advice. If there's any stocks that you'd like for me to take a peek at for you, just drop that 3 symbol ticker in the comment below, and I'll be more than happy to do a video for you here either today or tomorrow. Okay, thank you. See you on the next one. Bye.